situation. Now, within that difficulty, why I consider that there is an opportunity. You know, when you go around the world, you do realize that mineral-rich, energy-rich, or consumption-led economies will do well and are doing well. We obviously repurposing ourselves and making sure that we are well represented in all of these energy-rich, oil-rich, commodity-rich areas. Secondly, I believe that the resurgence of IT services will happen very soon. Now, it could be soon, could be 2 quarters away. And that resurgence of IT services means that we as a company, our investments to be ready for that resurgence will help us. And hence, we will continue to invest. And I can only tell you that the previous economic downturns have taught us that it is a good opportunity for us to acquire talent. It is a good opportunity for us to reinforce and relook at some of our processes and also relook at prioritization of our digital offerings. So I can only repeat, your company is working with alliances, your company is working with our clients, and we continue, and I'll let Manish speak on the 3 themes that he's pursuing, or rather the company is pursuing, on modernization, simplify, and, so I'll let him speak, but ultimately we are helping our customers grow. As a matter of confidence and as a matter of capital allocation policy, Tech Mahindra will be giving a final dividend of rupees 32 per share, which translates into rupees 50 as total dividend for the year. So it is a matter of confidence that our capital allocation policy, which means that if I have any cash reserves that I do not need, I'll return it to the shareholder, and hence we are now declaring, my board has authorized me to give 50 rupees as a dividend, total dividend per share. In terms of performance, I know Rohit will cover it in detail, but our revenue is almost the same as last quarter, which is 1668 million. CME has grown 0.7%. Enterprise vertical, for us, healthcare took a little bit of a dip. Overall, we have seen Europe taking a little bit of a dip. So, I mean, enterprise vertical has seen a decrease of 0.5%. Our investments for future meant that my EBIT numbers have fallen down, but all I can tell you is on a full year basis, your company is now a $6.6 billion company, a growth of double digit, 10% over previous year, 13.7% on constant currency basis, and that's what gives me the confidence that our investment for future, our focus on becoming more resilient will help us being ready. On a yearly basis, CME has grown by 9%, enterprise has grown by 11%, EBIT margin, I know there is a bit of a pressure, but at the same time, it also meant we have invested, and EBIT is at 11.4%. So, again, a quarter with about 600 million of large deals, a quarter where my pipeline is robust, a quarter where our repurposing some of the country focus is helping, and I strongly believe that yes, there could be a little bit of a headwind, but it will only last for a few quarters, and your company is ready, the leadership is ready, also for the year of transition of the CEO, And we do believe that Tech Mahindra is addressing many of the demand drivers and are focused on leadership development and leadership transition. So, again, thank you all for coming to Pune. Thank you so much, and I'm going to now request Rohit to take us through the numbers in a little more detail.
All right, well, numbers are flowing in thick and fast, and we have Axis Bank's numbers as well that were flashing for you on the screen in the interim. So Tech Mahindra and Axis Bank, just focusing on the numbers, the net loss was as much as expected. The NII number was a small miss in comparison to what we were working with. It's around, can't quibble about it, it's just around 1.5% miss in comparison. So it came in at around 11,740 crores. That compares with around 11,932 crores that we were looking at. The NII number, well, the absolute number has given a growth of close to around 33%, but the asset quality has improved a little bit. The gross NPAs in absolute terms, well, that's down by close to around 1,300 crores. The net NPAs as well are down by close to around 300 crores. So that's another 10% reduction, on the net NPAs. And in percentage terms as well, there is a softening of close to around 35 basis points, both on the gross NPAs as well as on the net NPAs. That's close to around 9 basis points. Ritu Singh is standing by. She's going to run us through a further analysis on these numbers. Ritu?
Well, we offsetted some of the headwind, but given the impact overall of headwinds, outweighed the actions from a productivity standpoint, hence overall reduction in the margin. As we look at dividend, CP already mentioned, we've announced an 11% increase in dividend versus last year. We were at 45 rupees, we've announced 50 rupees this time. And as per the policy, since we didn't have any major acquisition, we've returned that cash which we generated through the operations back to the shareholders. Through the year, we generated a cash close to $500 million, which was 84% of conversion of PAT. That's what we focused on returning in terms of dividend. Besides that, from a key other aspects which probably I can add to what CP mentioned is our business process. Business has grown more than 20%. Our high-tech business has grown more than 20%. So they've delivered significant growth in the year. Communications, already CP mentioned, on a constant currency basis is upwards of 13.5%. As we look at the large deals has been close to $3 billion. And we continue to grow across geographies. When you look at the geographical growth, we've articulated at the beginning of the year that we will grow more in US and Europe. So if you see US, America's growth is more than 15%, Europe growth is more than 13.5%, and the rest of the world growth is around 11%. So we continue to drive that geography mix on a long-term basis that we had articulated, and we will continue to push in the same direction. So those are some of the financial highlights. We're happy to take more questions as we move forward.
We can have Vivek also address on synergies. Yeah.
So just on our acquisition strategy, in line with our stated policy, we've continued to focus on synergy from our acquisitions in the couple of years back. What we are right now is focused on is driving about 20% revenues of our acquired businesses in the form of synergy. And the synergy is a 360-degree synergy where we are able to cross-sell our services to the client.